Okay, so great to be here. I'm joined by Dan Tapiero. My name is Ben Forman. We're going to talk about a number of different things. We only have 20 minutes, but the title of our talk is The Mass Migration of Value on-chain. And really where I wanted to kind of start is, if you kind of look at where we are today in the industry, there are $3 trillion of digital assets. About $200 billion of that is stablecoins and tokenized real-world assets. And we're now 15 years into this industry. So the question is, how do we get the $600 trillion of stocks, bonds, currencies, and commodities to kind of migrate on-chain, and what does that look like? I'll ask one more question, and you can riff on this for a bit, but have we made as much progress as you would have thought starting 10T 5 years ago?
Yeah, well, that's a tough one. We start off with a tough one. You know, I think we're all surprised that it's taken this long. I think you and I have both had a general view that eventually all things of value will move on chain. You know, the difficulty is, and you and I talked about this yesterday, is that you know, there's a hurdle, I call it an intellectual hurdle or bar, to get to a place where you have the people who control or who manage traditional assets, TradFi, to a level of comfort with having things on-chain. And you know, I think that hurdle is essentially the reason why it's taken so long. I mean, to you and I mean, this has been always the thought. RWAs and stable coins, I think, you know, 4 or 5 years ago, I don't want to say it was obvious to us, but it was very clear that that's where we're moving. And, you know, today, you know, that area of our digital asset ecosystem is still tiny. And unfortunately, I just think it's going to take longer. The execution of it, I don't know, you know, we live in this decentralized world. I don't know that we have a single figure or a single party who's sort of leading the charge. And maybe there is no person leading the charge. Maybe the reason it's taken so long is that it's, you know, we live a little bit in a chaotic world. You know, there is no one really leading the path. I can't say BlackRock or any of the smaller firms are really taking, I would say, a full charge in this area. So the answer is, I don't know why. I just think that this hurdle has been huge. And a caveat to that view, and you can respond to this as well, is that I actually think that we first need to get a wider level of acknowledgement or adoption and ownership by the traditional world of our world. And for me, that means bringing some of the companies that we have to list on exchanges, NYSE, NASDAQ. I think, you know, we have 23 investments in our portfolio, probably 8 to 10 of them, hopefully in the next 2 years, will list in some form or another. The public, the investing public, needs to be more educated, needs to have exposure. And so while I think eventually everything moves on chain, I think there's a little mini step beforehand where a lot of the value, at least of the developed companies in the space, actually gets listed on exchanges.
Why do you think having more crypto public companies will ultimately result in like more value coming on chain? Is it just a function of education, or is it something?
Yeah, I think it's education. And I mean, look, I think about, you know, I entered this space in 2012, 13. We launched the funds, you know, had the idea for the funds in 2019. It takes a long time to understand what's going on. I mean, you are at a level deep in the weeds, deeper than I am in DeFi. And there are things every single day that I'm learning that I don't know, which really shouldn't be the case. I've been doing this all day, every day for 5 years. And every day I have a conversation about something that I had no idea about. That is not normal. And so I think traditional investors who are very hesitant, maybe they own a little Bitcoin, a little Ethereum or whatever it is, I think need the comfort of seeing a business. American investors like to own businesses with cash flow, balance sheet, income statement, a proper board, and also legitimacy. I mean, let's be honest, one of the big problems with our space is that every 2-3 years, we shoot ourselves in the foot. You know, we have an FTX happen, and the next thing you know it is the growth equity investors from the traditional world have shunned our space. You know, we're the only, large growth equity fund exclusively focused on crypto, blockchain, Web3, digital assets. I think it's ridiculous. I would have thought by now we would have had, many more of the traditional guys. And so we continue to shoot ourselves in the foot, and now the capital is not there at the growth stage, at least for now. So listing on proper exchanges, going through that diligence process, that's a form of legitimacy. Now, deep crypto guys will be like, well, who cares? What? We don't need that legitimacy. We don't care. But 99% of the capital in the world is outside of our space. So for me, the way that you learn, the way that, we can't move on chain if people don't understand the difference between Bitcoin or ETH, or, what Kraken does, or QuickNote, or Ledin, or any of the companies that, we have in our portfolio. So I think it's that legitimacy, but also education.
Yeah, so I think when you started 10T, you were really the exclusive and kind of like largest, by far the largest growth-focused fund in the crypto space. And I remember in 2021, you had kind of Tiger, Co2, some of the crossover funds start to get pretty aggressive in terms of investing in companies in the crypto space. All that capital exited the market in 2022, post-ZERP, and really hasn't returned. So question now is, with the change in the new administration, some more tailwinds for the industry, some more institutional adoption for the industry, do you think that those pools of capital come back into growth equity markets? Well,
as you are also, to some degree, an investor in the growth stage, and we have some overlapping investments, I know you hope so. And I hope so too. But to be honest, I think it'll come in the next year or so. There's only been one growth deal, large one, Phantom, that happened a month or so ago in the last 2 years. It was the only real growth deal that I saw. It's very difficult. It wasn't just, it was Thoma Bravo that came in, and Silver Lake. The other part of the problem is that the founders in our space, who are often young guys, they, in a way took advantage and raised money at what I thought were preposterous multiples. So, Alchemy is the poster child for that. 100 times revenue at $10 billion valuation. I think they were doing 100 million in revenue. So it's 100 times revenue to Silver Lake. And they raised 200 million from them. So I don't know when they're going to make money. You can't treat your investors in that way. What investor is going to come back to the space if you're never going to give them a chance to make money? So I think what we need is sort of, some of the founders to become a little more reasonable, and think when they raise capital that they're bringing on partners, long-term partners. We have 10-year life funds. That they want to partner with over the long term. We passed on many of those deals just because we didn't think our LPs would ever make any money. It's not that we didn't like what Alchemy was doing, or we didn't, not like what some of the other companies were doing. It's just that it's hard to invest at those multiples. And I think that's keeping some of the traditional growth equity guys out even today. So.
Yeah. So maybe there are, 5, 10 companies in the crypto space that have enough product market fit, enough scale to be a public company. What about the other?
I think there are a few more than that.
Okay,
yeah.
Fair. But what about the other couple hundred companies that are arguably worth less than their pref stack or worth meaningfully less than their prior round, have broken unit economics or cash flow negative, what happens to all those companies?
Just, it's a miasma. I mean, they're slogging around in the dark for a while, and it's survival of the fittest. And and that's why this space is so great, because I mean, it's the only, I think, purely capitalist, I don't want to call it Wild West, but it's an open field. And I mean, it's just force of will. The guys who are going to survive are going to do it on their own. There's not going to be any, government help. They're not going to get bailed out by the Fed, honestly.
Look at Ledin.
Yeah, look at Ledin, the company we both owned 18 months ago, was nearing its end, and now is doing 100 million in loans a month and is going to be hugely profitable this year. So, but you know what, Ledin, it's an interesting example, because Ledin, I think really the investors like us and others, they really I would say, look upon us as partners. And when they got into a little trouble, as a result, we were there to help them, even in a small way, whether it was with capital or advisory. So I think, those types of companies with broken cap tables, et cetera, I think it's massive opportunity for the funds. I mean, you and I have a lot of work to do, but I think there's a lot there. Of the ones that are more developed, we stay away from, I would say, projects that are more venture. Very difficult, and I don't think we have enough of a team and expertise to really get as deep in the weeds as like a Parify or maybe Andreessen or some of the other, true VCs. I don't see us as truly VC, even though people think we are, because we're crypto. And some people in the outside world just think, oh, it's crypto, it's VC. Company making $1 billion is not really VC.
Yeah. So, I guess as you look forward, 60 days ago we had a change in administration. Prior administration was unfriendly to crypto. This new administration seems more friendly, although I think there's still some questions. Do you feel like there will be meaningful changes in U.S. regulatory environment? And do you view this as, this catalyst as kind of overrated by the market? Or do you kind of feel like there's a bit more sizzle than steak as it relates to kind of what we're going to see in the U.S. this year?
Well, I think it's the single most important change in the history of crypto. After the Satoshi white paper. So, yeah, I mean, we were under attack, as you know. We had companies being sued 6 months ago. We've got a new guy at the SEC who's pro-crypto. The administration itself owns cryptocurrency. It's been the most dramatic about-face sort of change that I can recall on any subject. And now we have the most important government in the wealthiest country out there actually supporting the industry. I think it's underpriced. Markets are markets. Markets are going to, you're gonna have corrections. And now I think people think, oh, it's the end of the bull market because we dropped, to 80,000 on Bitcoin. I think it's very funny. I think it's very funny. So I think we are going to get regulation, or let's just say we're going to get a clear framework from the U.S. government. Look, they've made it clear, and they've said on several occasions, they want the U.S. to become the crypto blockchain hub of the world. If I look at the other places around the world, Europe is not saying that, and they're always, bogged down in bureaucratic things. Asia, to me, is total chaos. Mainland China, you cannot trust as a place to do business. Maybe they're friendly 1 year and then they change their mind. That's preposterous. I just think China has sort of blown it. Doesn't mean they can't grow. Doesn't mean their markets can't do okay. But if I'm starting a business, I'm not going there. So the U.S. has, made a very strong move. I think we are going to start sucking in talent that would otherwise not be here. I'm hearing, even at this conference, and surprisingly, companies from Asia who are attempting to make inroads here and hiring people, setting up here. I mean, companies that, wouldn't step foot on the US mainland for 5, 6, 7 years. So that's pretty incredible. And of course, you have the relationship with Tether and Cantor Fitz. And I think that maybe is a model, maybe some of the more successful companies and protocols, they partner with American businesses as well. So just because the market is in a consolidation phase, or because you have certain altcoins that are down 80, 90% from their highs, this is the most bullish catalyst that I've seen, period. So.
In your conversations with different institutional investors and allocators, what are you hearing from them? Do they share that bullish? Are they kind of getting off the sidelines? Has this been a catalyst for them?
It's no doubt a catalyst. I mean, we raised a fourth fund in 23 and 24, and a lot of those conversations were very difficult. People, just were not interested. Even investors who invested in our first 3 funds, they just, were, I mean, they were just afraid, simply. And they had some exposure. It was down a lot in some cases. And then you had the SEC, and then what was really bad was the SBF trial on TV every day. That really hurt people's psyche. We've had a complete about-face. It's complete in the last 2 months, and people really are scrambling to figure out, okay, my goodness, this is real. We didn't do anything before. We missed buying during the bear phase. And what are we doing now? And I think it really is such a scramble. You and I have so much work ahead of us. I'm just exhausted thinking about it. Really, I am. But it's all coming now. And I think we are gonna, as I mentioned before, we are going to have an IPO, a crypto IPO, M&A, SPAC boom. And so once you get some of the traditional people reporting about this more, again, American investors love owning equity. That's not going away. No matter how successful we are putting everything on chain, we're not going to change that habit anytime soon.
Yeah, and I think the other thing I would add is it's not only crypto companies going public, but it's existing public companies incorporating crypto. So,
Good point.
On Robinhood's earnings call a couple weeks ago, the CEO mentioned that they're very focused on tokenization. They're using stable coins to facilitate weekend and after-hours settlement.
That's incredible.
I think you'll start seeing, there was just a equity research analyst that put out a report today saying crypto is the biggest catalyst for Robinhood, and they put up a price target 50% above current levels. So I think it's also existing companies kind of continuing to focus on crypto as a theme, which I agree should produce that feedback loop. I want to end, we have 1 minute left. I want to end with a question on your thesis. How has your thesis changed and evolved since starting 10T 5 years ago? Are there, what did you kind of underestimate, or what did you get wrong? And what is one core belief you have today that maybe you didn't have when you started?
Too many questions.
Too many.
Old guy needs to answer one question at a time.
Okay.
So what's changed?
Right.
Well, in 2019, there were only 20 businesses in the entire space that had a valuation, let's say, over 400 million. There were only, I think, 10 that had $1 billion valuation or more. So today, in our universe, there are over 100 businesses with a valuation of over 400. At the peak in 21, it was probably 150, but that was exaggerated. you know, in the middle of 2019, the value in the space was only 300 billion based on our metric. Bitcoin, the value of Bitcoin, ETH, and all the equity was 300 billion. And today, it's about 5 trillion is the number, give or take. I mean, it depends. I mean, right, but I include all the equity
I see it.
of the space as well. So what is Tether worth? What is Binance worth? All of that, plus, and you know, you're at 4 to 5 trillion. So you've had, you know, a 10 to 15x. And again, look, in 19, Coinbase was still private, and you could buy it at $6-7 billion valuation. You probably remember that. And so there were no public companies. And I just had this view that there is no chance that over the next 10 years, Coinbase is going to be the only public blockchain crypto company. Just no chance. And I thought to myself, all right, I'm going to buy the companies that are private that will eventually, you know, be public and eventually one day be in the S&P 500. And if you ask me what the surprise is, well, I'm surprised that it's still only Coinbase, but we're on the brink now of massive change. And I think the US administration is going to, you know, is setting the tone. And so I think that that surprise is now going away.
Great.
So,
well, thank you so
anyway,
much. Always
thanks.
enjoy
Thanks,
hearing your
Ben.
insights.
All right.
Thanks so much.
Great.